Okay, so why are people panicking in the market right now? Well, the reason why people are panicking, there's always a reason. The reason why people are panicking right now in the market is because a famous investor has just bet that the market was going down.
Oh.
Okay. Now, who is this investor? None other than Michael Burry. This is the guy from the movie The Big Short.
Oh, yeah.
So he just bet right here. So if I type in Michael Burry, and he has a huge short company which basically bets whenever markets are going down. So, bam. He just bet $1.6 billion.
Oh, my God.
So everyone's like,
Oh,
oh
no.
shit, this guy knows something that we don't know, because he's always usually
I feel like
ahead of the money.
the opposite.
So what you do is, while everyone's panicking, you buy at a discount. And as soon as the fervor for the market comes back and people are more positive, you sell. And that's how you make easy money in the stock market. Now, you could buy stocks and do that, but unless you have like, 20K that you can just spend on a bunch of stocks, you won't make a significant profit. And that's why we're going to trade options. So here, we can look at several good companies, right, that have come out with positive news, because it's as if the whole market has forgot that those companies are doing good regardless of this fantasy right now. So people forget that the stock market, and based on accounting principles, is based on the value of real companies. Okay, there's a bit of inflation in there based on people's exuberance and things like that, but for the most part, the stock market is measuring people's companies, their profitability, and we're looking at that digitally. So at this point, what's a company that you know that's doing good?
Right now?
Mm-hmm.
I can't think of any.
You can't think of any? Okay, so let's look at this quarter, this season. We're going into September.
Oh, right. Like, as of, like, industries?
Yeah.
I don't know.
Okay, so that can happen. Sometimes we have no idea, and that means we just have to do a little market research. But for times like this, we can go into an index, right? So an index will be something like the SPY or the QQQ. The SPY represents basically the top 500 companies in the market, and they've been put together in a portfolio. Right now, they're dying because everyone's worried.
Wow.
So if we look at the SPY's performance over the course of several years, the SPY usually does good. Warren Buffett even advises people, if you don't know what to invest in, just get a SPY index. Usually a SPY performs pretty good overall, I think 8%, than most investments. People are panicking. So over here, we can see that during this month, or this week rather, there's been a good amount of selling. Then we go to month, we see that there's been a good amount of selling. We go to 3 months, we see that it has gained some traction over the 3 months, and now it seems like people are trying to wean off the top. If we look at the year, now you can see that the SPY generally does good over the course of time. Look at the 5 years. If you had invested in the SPY, this would have been your return, right? You would have, if you invested in the SPY 5 years ago, any amount of money, you would have already received about a 50% increase on that initial investment, which is probably better than most banks' return if you just leave your money in there. So SPY is generally a good bet. Now, over here, we can do several things. We can do short calls or we can do long calls. We're betting that this stock price, which is currently at 438, is going to reach a certain number by a specific date. Now, one thing I like to do as well is I'll go advance and I'll look at the actual, what we do is candlesticks, because this allows me to see x-ray vision into what's actually going on. So over here, if we sort of get into the nitty-gritty stuff, anytime you see a red candle, that means people are selling mainly during that period. If you see a green candle, that means people were mainly buying during that period. If you see these sticks, that means people were going like a certain direction, but then the other direction kept eating it up. So like the sellers or the
Like
buyers.
these?
So yeah, you'll call them wicks, right? So the way I like to explain this, imagine there's a gang fight between the Bloods and the Crips, right? But the Crips happen to be green at this point, not blue. So we're representing the Bloods as people who are sellers. They're selling their stock. They're making, every time you sell a bunch of stock, the stock price goes down because it's showing that not that many people want that stock because they're getting rid of it, right? If the stock price goes up, that means more people are buying it. There's more of a demand than that supply of the stock. So that's why we're seeing more green. So each of these candlesticks right now, I have the time period. Based on what I'm seeing here, I think it's like every 10 minutes. Yeah, so this is every 10 minutes for the candlesticks, right? Within this 24 hours, it's showing me every 10 minutes. So within that 10 minutes, over here at 2:30 a.m., right, it's trying to say that that's what was going on. Now, I don't think that this is our regular time. So let's go towards what's going on right now. At 1:30 p.m., people were selling mainly,
Like crazy.
right? Now, what was happening at 2 p.m.?
We're buying.
Exactly. People were buying. So over here, you might see something like this. Now, this looks weird, but what that means is people were selling a lot, right? It came down here, the price. And if you look over here, 440. But then people started buying so much that this red candle almost turned back green. Now, what determines if it's red or green? Well, basically, whatever the stock price was initially at that 10-minute interval, did it officially go down after that 10-minute interval? Is it the stock price less, or did it officially go up, right? If it officially went up, you're going to see a green candle. If it officially went down, most likely you can see a red candle. Unless there was an even amount of buying and selling, in that case, you might not see any candle. Over here is an example. It's pretty much even amount of buying and selling. That's why we don't see any candle. So that's candlesticks in a nutshell. Now, usually you'll see a big sell-off at this time. I like to buy right before the stock market closes because now I know, all right, in the morning, they're probably going to start buying real quick because people are like, oh my God, this is at a discount, and I can sell at that time. Or you might just see like it start even going up the last 10 minutes because so many people sold and a lot of people are selling out of fear. So sometimes what you could do is you can say, all right, let me wait till the candle starts turning just a little green again and then get on that sort of wave back up, right? Or you can say, let me wait till Friday at 3:50 because the stock market closes at 4 p.m. To get in, and then that way on Monday morning at 8, I can sell. So these are strategies that you can employ. That way you're not just doing a bunch of random things. And again, the SPY is an average of the best companies in the US. So would you rather trade individual companies and see, all right, is this company going to do well? Or would you rather say, wait, on average, the best companies in the US, which are being traded, are going to do well? So that's why it's safer. And also a lot of people trade the SPY. So there's a lot of volume and liquidity there as well. So like you won't be holding on to a contract that, oh my God, no one wants to buy it right now. Like people are going to buy that contract right away. So here,
under SPY, like which companies?
so we have like pretty much most of the companies that you recognize. If we see, say, let me think off the top of my head, like Ford, GM, let's see, like a lot of companies that are considered like staple American brands. We can actually Google a few off the top of my head. So let me say SPY companies. Okay, so these are the companies. JP Morgan, Home Depot, MasterCard. So you're going to tell me that all these companies are going to do, or most of these companies are going to do bad over the long term? Of course not. That's why it's such a safe bet, right? These are staple brand. We call them blue chip almost companies. Now another.
There's 50 of them.
There's 500. I think.
So those are the tops.
Yeah, these are like top by index because they do it based on also how many the value of that company, right? So they want to make sure like it's at a certain like market cap. That's why certain companies will get kicked out the SPY if you don't perform well enough.
Oh wow.
That's how cool it is. So now you don't have to manage your own portfolio and be like, oh my God, which companies are doing good? The SPY already did that. okay? It's kicking out the companies that are not performing well enough to actually be included in the SPY. Now, there's another index that I love to trade called the QQQ. The QQQ represents tech companies, the best tech companies, basically. And those have been killing the market because tech is just exploding at a very rapid rate. And these companies are usually tried and driven. So let's say QQQ companies. Tesla's in there. Or I don't know if Tesla got kicked out because their price was changing so much. I have to double check. But let me see here. No, Tesla got included in the SPY, and then I think they may have gotten kicked out recently. But yeah, let me see SPY holdings right there. Okay, so it's just going to show us the top 10. Okay, so Apple, right? Microsoft, Amazon, so FANG, right? NVIDIA. Oh my God, I love trading NVIDIA. Now, you know what NVIDIA does, right? So NVIDIA sells these microchips, which pretty much are responsible for most of the computers and the electric vehicles. So people really need them. Meta, that's just Facebook. Alphabet, people usually forget what that is, but that's actually Google. So they have such a big company that they broke it into Class A and Class C. Broadcom, Tesla is in the QQQ. I don't know why Pepsi's in there. It's a little weird. I'm going to double check on that. But these are pretty much the top 10. And then you have the Dow Jones. You heard about the Dow Jones? So the Dow Jones is the top 30 companies. I think Salesforce is in there now, if I'm not mistaken. So these are the Dow Jones. So sometimes you have a company that's included in multiple indexes. Okay, so these are the Dow Jones. So let me see if Salesforce is in there. Because I remember 2020, yeah, exactly. Salesforce made a good amount of money. So when our company gets included into the Dow Jones or the S&P 500, its stock also soars because a lot of people now have to buy that if they're like tracking their portfolio based on the SPY and they want to include those companies in their own portfolio. So that's something that happened. But that's a lot. We're getting sort of ahead the point. Right now, all we have to know is, bam, we're sort of seeing the stock price happen. Now that we want to sort of get back into regular mode, I'll get out the X-ray vision and we can see it's still selling. So I wouldn't buy here, right? Because it still looks like it's in free fall. So we were like, all right, where's the bottom? Where's the bottom? Everyone's like, oh my God, I don't want to like buy, and it just keeps going down and you look like a dickhead sometimes, right? But sometimes you can't really time the market. That's why it's good to just do research and say, all right, what's really going on with the economy? Don't buy around federal meetings, right? When Powell used to go ahead and give his update, oh my God, the market would just tank so crazy until after. So like Federal Reserve meetings and things like that, not good time to trade, too much random things happening. So yeah, let's check around the market around 330 to like 340. That's when I like to trade because there's less, I don't have to stare at the chart all day now and be like, all right, oh my God, is it doing well now? Like I'll just literally by at the end of the day, stock market closes, tomorrow morning I'll decide whether I'm going to sell or not. If it's not that good enough to sell, I'll just hold it for a little bit and it'll end up booming. I usually get a contract for about 2 weeks out. How do we do that? You go to Trade SPY. You can go to, so here it'll try to make you buy a stock. You're like, nah, I don't want to be broke. I want to buy a stock, right? I want to go ahead and trade options. Once you trade options, here you can see expiration dates. So these expiration dates are like literally when you're betting that the stock's going to go up by that date. Now, buying an expiration date for tomorrow, not such a smart idea. But if you want to test things out, you know, you can still make money on that. You'll make a lot more money because it's so cheap that a lot of people buy it. So there's a lot of volatility in there. But if it goes the opposite way, no one's going to buy a contract that might expire that same day. Like you're just going to probably lose the money. How much is this contract? Well, it's only $49, right? And basically, if the SPY goes up to 442, you can make a killing on that contract. But I don't like buying same day contracts. I don't like buying 1 week contracts. So that's even next week. I like buying, wow, they even doing 4 days for this. So they're trying to take everybody's money. They're smart. They created more expiration dates so people could get trapped in those little slots like flies almost. No, you don't want to do that. This is safe enough. But honestly, because I know that people get excited for the next month, I'd rather put my contract for that 8th. Now, why so far? Because if it booms tomorrow, I can still sell it before the 8th and make a profit. So it's like insurance, basically.
Okay.
So if it booms tomorrow, if I buy this right now, this contract, and let's get closer to the share price, right? Because why not? It's going to be an easier bet. A lot of people will still go up here because it's a little cheap. Why? I want it right here. Now, if you're even really smart, you're going to do what's called an in the money call, which means like you're already betting that it's not going to really go below this price and it's going to go up. So this guy is already what we call in the money. These are called out of the money. So long story short, you want your calls that are out the money to end up being in the money at some point, because the value of that contract, you see how these values are changing right now? The price is changing as we're looking at it. Because people are either selling or buying. So if you buy this right now, you can make a quick, so right now I'm seeing the market change, right? I'm seeing literally, it looks like it's starting to stop tanking. If we see this hit 700, this premium, that means this stock price is literally going towards 439. That's going to be in the money. So it seems like people are still selling, and that's why I don't like to buy here. Wait till the end of the day, you're going to be good. So trading options is so easy. So this is called a call, right? We're betting that it's going to go up. But what if I felt like Michael Burry and I want to make money when the stock price is going down? Well, all I have to do is change this to a put. A put is betting that the stock price is going to go down. So literally, you have to flip it in reverse a little bit. These are technically in the money now, because you're saying like, no, it's not going to go. It's still going to stay lower than this. It's still going to stay lower than this. Whereas these are out of the money, because you're saying like, it's going to drop to this. It's going to drop to this. So it's so cool how I can make money whether the stock price goes up or down. If you buy a share, you can only be betting that the stock price is going to go up. Now, you could do something advanced called shorting stocks, which is when you buy it and then you sell it to somebody else right away at that price, because the price is going to go down, and then you sort of buy it back from them. It's like a guarantee that you could buy it back to them no matter what. So then you're basically going to buy it back for way cheaper than you sold it to them for. And that way you collect that premium and you still have your stocks. So that's advanced stuff. I don't do that. That's very risky. That's how you hear people like losing their money or going into debt, because if they pretty much buy it off of you and the stock price starts going up, you still have to buy that shares at the end of the day. So now you might have to end up buying your shares that you sold, hoping that the price is going to go down at a way higher price. So you're going to be like, oh, fuck. And if it's like fucking, it soars crazy, sometimes the market just goes crazy like Tesla, you will be bankrupt. Right there. So don't short. Buy a put, because the worst thing that'll happen, you just lose $50. Literally. That is the worst. But how much you could gain is unlimited, because the stock can go up to however much exuberance is in the market that day. Options trading, crazy. The stock price is only changing like a few cents, and these premiums are changing dollars. If you buy shares, you're going to be making like $4 today. You buy options, you'll probably make a few $100, but then you're going to also lose money. But you don't lose money until you sell, right? So it's all about also controlling your emotions. I don't like staring at the charts all day. I make a decision. I look at the chart. I find the best time to enter, close the laptop, I go do whatever I got to do. I come back, sell time. Sometimes I might even be so cocky that I'll put a pre-sell order. I can do that. I can say, yo, if it hits $1,000 and I only bought for $400, sell it for me automatically, even if I'm not on the computer.
Okay.
And that way you don't have to have your emotions involved. So for calls, again, if you're going to buy a call, why is it red? It's showing that the price is going down. That's why it's red right now. But that might throw a few people off. So if I want to buy this call right now, I'll literally click here. And I'll teach you about all of these attributes, because these are like attributes for each contract. But as of right now, I don't want to over sophisticate things. So we're just going to literally say, pretend like we're going to buy this contract. You literally say, all right, how many contracts you want? Now you can also get more than one contract. So if you're like, I definitely know that this is a good, are these guys dumb? Why are they selling the SPY right now? You could buy 10 contracts. And then I can only sell 2 today. I could sell 2, 3 days later. I could sell 4, like a few days later. Or I could sell all of them at one time. Sometimes if you want to cut your losses, you can sell all of them. Why lose $50 when you can only lose 10, right? And then you have a chance to trade. So that's also things that you want to take account of. I don't allow I'm not scared of being wrong. So if I know I'm wrong and I lose like 10%, 15%, cut your losses, because you already probably jumped in at a bad time, right? Most people are like, no, I'm right. The market could be wrong longer than you could be solvent. That's actually a saying, which means like the market can technically be wrong and like maybe everybody's being dumb and you were right. But how long are you gonna have your money burning until like you finally realize it doesn't matter, the market's saying this, like take your money out, man, you're losing money right now. So if maybe all the indicators are right, the news came out and said the market's supposed to be amazing today, this company just like sold $1 billion, inventory that they didn't expect, and the market's still doing terrible, dude, do not watch your money go to the ground. Take your money out, just relax. A lot of people also will make money so fast that they'll think they need to trade every day. Oh my God, this is a chance to make money every day. No. Like I said, if you're the best gunslinger in the Wild Wild West, you still don't get in the gunfight every day. You literally preserve for the opportunities. I like to be watching and really focused on opportunities to get in the market. Not like, oh, can I trade every day? No. Is there an opportunity like Michael Burry? That's going to polarize the market. I like that because I know people are either thinking this or they're thinking that, and now I can position myself to know what's actually going to happen in the long run based on my own research. Now I also want to look at the pricing action to see when to jump. Should I get it at 5? At 350? Should I get in at 130? Because maybe at 12 o'clock, all the stock price lost half their price just because the president got shot or something like that, right? God forbid. Well, in that case, the stock price might cut in half, but that's just super fear and panic. At that point, I'm not even waiting till 350. I'm getting as many contracts as I can get, and then when everybody goes back to normal, you sit in there cha-ching, which is how I got to where I am right now. That happened during 2020 COVID. Everybody panicked and started literally selling their stocks, everything. Airlines, oh my God, they're closing, oh my God. Everybody got rid of everything. The market lost so much value, and then the market quadrupled. Crazy. More people started trading more than ever because now we have platforms like this that allowed regular investors to get in the market. I saw that. I'm like, wait, if I can invest on this platform right now, there's probably a bunch of people like me who are going to join. So even though the market is doing a little bad right now, if you have more buyers, then the market should naturally go in an upward trend from what it is right now. So when everybody was panicking, best time to buy. When everyone's super excited, get the hell out. Get out. Even if it looks super good, get out. Because someone is going to dump on you guys. What happens is you have these big players, hedge funds, mutual funds. They'll buy a bunch of these stocks, and if you guys are all buying it, well, the price has got to the number that they wanted to sell at. They will sell it, and because they had a bunch of shares, it's going to infect the price huge. So now everyone has lost like 20% of the value of their stocks. Be careful of that. So that's the game of the stock market. It's a little bit of game theory in there, but honestly, just follow your discipline. Don't trade against your discipline. If you say you're going to get in at this time, get in at this time. If you say you're going to cut your losses at this time, cut your losses at this time. It's all about being able to trade. And when you see profit, take profit. A lot of people's like, no, I wanted to go more. Greed kills most traders. And all of them say, it's not going to be me. When I get on the phone with them every time, it's not going to be me. No, I'm not like that. Oh, yeah. No, trust me. If I see money, I'm going to take it. And you know what happens? They have $2,500 profit that they made in a day, right? The contract is worth $2,500 more. However, they're like, wait, what if it goes to $5,000? Because they couldn't believe how fast it got to $2,500 already. So they lose all perspective, and now just from waiting for that $5,000, they've actually now lost $200. Like the value of the contract, all those people sold so fast at the top that you were stuck with it. So now you were trying to wait for that $5,000. Now your value is actually $200 less than you initially invested. Don't get caught in the trap. Options trading more volatile than stocks, so you want to make sure you're taking profit. So that's like option trading in a nutshell. Like if I could explain it like literally like 20 minutes, that's it. I'll explain all of these, later on, but I think you have like more or less the gist of it. And then I also recorded this as a video so that you can reference it whenever you want. So we're not gonna trade yet. As I said, we're gonna wait for